Indian banks must bolster capital and augment credit flow, says report. Indian banks need to bolster their capital to absorb potential stress and augment credit flow when policy support is phased out, the Reserve Bank of India said in a report on trends and progress of banking on Tuesday. Credit growth is muted, indicative of pandemic scarring on aggregate demand as also risk aversion of banks. Banks' asset quality may get dented going forward, the RBI said. Going forward, the sector may have to grapple with higher delinquency as and when policy measures unwind, the RBI said. NBFCs also need to be better equipped and focused on cyber fraud prevention as customers' adoption of digital lending gathers pace. It added. Gross non-performing assets ratio of commercial banks declined to 6.9% as of end September compared to 7.3% at end March. Banks' return on assets also improved to 0.7% at end March compared to 0.2% a year ago, aided by stable income and a decline in expenditure. Nonetheless, incipient stress remains in the form of increased proportion of restructured advances and the possibility of higher slippages arising from sectors that were relatively more exposed to the pandemic, RBI said.